sure that the old technology is running correctly. Let's see. We got a nice sunny day here. I'm getting a little echo feedback here on my side. Let me see if I can correct that. Bear with me, people. There we go. We got this going on. I'm going to turn this down a bit. All right, I should be good. Well, all right, it's top of the hour, and let's get this going. I appreciate you taking the time. We're going to talk about why traders fail and how you can crush it. Learn the truth why most people are doomed to fail and how you can beat the odds. So, I do want to point out that I am Jeff Swanson, founder of System Trader Success, a website dedicated to automated and systematic trading. And I also want to get a little bit of the housekeeping out of the way here. How to ask a question. There should be a chat box here, and you should be able to type away and ask a question. I'm looking at it now, and I'm just going to type in hello just to see if it's working. So go ahead and use that, and you can ask a question at any time throughout the presentation. I'll do my best to keep an eye on it. Also, Q&A is going to be at the end of the presentation. So if I don't see your question, or you have a particular question that you want to hold on to until the end, there will be some time to do that as well. Resource links. We're going to go through some resources. Go ahead and write those down, record that, but also I'm going to be sending out a resource link at the conclusion of this presentation. I'm just checking here. So also, this whole presentation is going to be talking about why I can't make money trading. So many people, start out the new year with a great ambition of becoming profitable, and by the end of the year, it doesn't work. And we all know the statistics. Most people fail when it comes to system trading. And why does that happen? That's specifically what we're going to cover, and I'm going to highlight some tips and techniques that are going to move that dial to more on the profitable side. So we're going to start. Also, I want to point out, this isn't a webinar about hot indicators or the latest Forex trading system. When it comes to trading and being successful, there's a whole other domain that you're going to have to become familiar with. And what I'm going to start out here is with something called uninformed optimism. I'm going to show you this chart here. And this is a psychological journey that we all go through anytime you begin to learn a new task. And what I want to point out is let's use this as an analogy for being a trader. So when we first discover trading and we first want to become a day trader or think that we can make some money trading, we start out in phase one. Now, phase one is in the upper left-hand corner. Time is on the x-axis. And the vertical level here on the y-axis, what that represents is your optimism and how well and how fulfilled you are. Well, when you first discover trading, you're bombarded by what you see out in the normal media. And you see all these great ads, and you have this uninformed optimism about trading. You think it's easy. You think you can do it. A lot of people don't make it, but you're going to be different. This isn't going to be so bad. Then you actually open an account and start trading for a few months, and you start realizing that trading's a little more difficult than you were first led to believe. And you reach point of informed pessimism. Informed in that you have a better idea of what the reality is, and then that pessimism starts sinking in. You crash below that dashed line from optimism into pessimism. You continue on, you start chasing indicators, you start chasing strategies, you sign up to chat rooms, buy certain programs, and you reach the valley of despair. This is where everything doesn't work. You continue to lose money no matter how hard you try. It becomes frustrating, demoralizing, and you probably close an account. Here you are in the valley of despair. And what happens is many people bounce between phase one and phase three. They will decide that, okay, this didn't work. I'm going to open a new account. I'm going to try this new indicator. And they enter a realm of new uninformed optimism. And then they go through phase two and back down to the valley of despair. I know people that I've talked to that have been stuck in this phase, going between phase one, phase two, and phase three, back to phase one, for over 5 years. And not everyone does that, though. A few select people push through to phase four. And what this often means is they develop an aptitude for making trades and that work, right? It sounds simple, but ultimately what it is they actually change themselves. They change as a person. They understand what works and what doesn't work. And often what that means is they have to become a different person. So then they start to see some type of success. They're at phase four, and they start to move into an informed optimism type phase, and then they spend many years perfecting their craft until they get to success and fulfillment. So I want you to keep that in mind. Where are you on that path? And I hopefully what I'm going to help you do is get through that valley of despair and really highlight some of the big macro picture things that you need to do to become successful. So we're going to start out with where most people are, and they exist in the fantasy world when it comes to trading. What do I mean by that? Well, I went online and I just did a search. I think I did Forex systems or Forex trading, and I came out with some ads here. How to become successful in the Forex within 60 minutes, even if everything else you have tried has failed, and even if you've never traded before. Sounds amazing. Here's another. It just might be the best investment of the decade. I make a tiny micro investment for as little as $50 and turn it into as much as $50 or $500 the same day. You read that right. That's 1,000% return in a single day. The best part is it only took me 12 minutes. Amazing, right? Here's another one. You could just be 3 hours away from solving any financial problem that you might have with my secret formula that turns $1,000 into $34,654 in every 48 days. Wow, these are amazing. The market out there is littered with ads like these, and YouTube videos, and equity curves, and flashy cars, and fancy videos telling you all of this information. You'll see equity curves that look like this. People boasting systems or ideas that, hey, look at this. It's amazing. Here's another one. Here's a robot that always wins. My FX robot can predict price movements a few seconds before they even happen. It's not magic, but it's an advanced IT technology that enables the robot to see where price is going. Therefore, you'll always be on the right side of the market, on the winning side. So, and here's the returns you see. Just amazing returns with modest drawdown, just incredible results. These amazing results that you see out there are bombarding you. This, my friend, is absolute fantasy land. And you have to ask yourself, is it too good to be true? It probably is. A lot of this stuff that you're seeing is simulated accounts. It's not real. It's phony money. And a lot of time, it's just back-tested history, which is largely meaningless. Other times you might see some short history. Hey, this has done great on this live market for 3 months. But that's a far cry from really what you should be seeing. Other times what you see out there is just outright lies. And I hate to say it, but there's plenty of lies out there or people fudging the truth. So you're constantly bombarded by this stuff. And it's no wonder you have this false optimism, this unrealistic expectation of what trading is out there. The reality is you have incredible competition out there. Remember, particularly with this futures market, it's a zero-sum game. But actually, in reality, it's a negative sum game. Zero sum game means if there's a loser, there has to be a winner. But it's even worse than that. We have a broker, a middleman. So he takes his cash from the winner and the loser in the form of slippage and commissions. And so what happens is the game is incredibly stacked against you right from the get-go because it's a negative sum game and also because of the incredible competition that's out there. So, what is the competition? Well, that's hedge funds. That's, very professional traders, people that have a lot of money, experience, and know-how behind them. Advanced degrees, a lot of know-how, technology, all stacked against you. So, what I really want to hit, the meat of this presentation is the top reasons that prevent you from reaching success. And it's not indicators, and it's not strategies, it's not knowing where to put your stop. We're going to cover the real stuff that prevents you from reaching success. And we're going to go over those unreal expectations. Okay? Number one, trading is easy. All right, if you were to become a medical doctor and wanted to perform open heart surgery, do you think that you could actually just watch a YouTube video or two, read a couple books, and then in your spare time become good enough to compete against all the other doctors that are out there and be successful? Now, I'm not saying that trading is like open heart surgery, but the analogy that I want to make here is when it comes to trading, it's a discipline, a skill set that takes years to develop. And there's a lot of psychological components that you have to overcome and technological components that you overcome. So this idea that you can just spend a little bit of time, some free time, and watch a few videos, take a course or two, and then, within a few months or a year, actually become really good at this is not real. That is a fallacy. It all comes down to also working hard. Now, when a doctor does his residency and goes through all his years and years of schooling, he's working really hard. Likewise, in the trading world, there are professionals out there working really hard as well. Like I said, a lot of money goes into this field, a lot of technology, and a lot of very smart people that you are competing against. So you must decide yourself that you're going to have to really nail this stuff down. And you're going to have to nail down a domain of skills, including programming, statistics, productivity, learning your platform, and psychology, to name a few. You're going to have to put restrictions on yourself, which means moving the bar forward every day. Okay, what do I mean by that? Well, maybe what you're going to have to do is cut out some TV. Maybe you're going to have to get up earlier. Maybe you're going to have to say no to things in your life, such as hanging out with certain friends, or cut it back and reduce it, and use that time to learn programming, to learn your platform, to practice and study. Just like you're doing a residency if you're becoming a medical doctor. They make a lot of sacrifices. Anyone who wants to excel in this is going to have to do a lot of hard work and soul searching. Maybe you're going to have to get up an hour early so you can work on your trading system. Are you ready to do that? Maybe you're going to have to cut out expenses so you can fund your account. Are you ready to really get your personal finances in order? Maybe it's just going to take years and years of study and practice and continued learning. Are you ready for that? So, number two, I want to day trade and make a ton of money. This is where a lot of people mostly start. And I got to tell you, today, in the realm of day trading, you are in the realm of high frequency traders. High frequency traders dominate the small time frames. And on top of it, excuse me, you have slippage and commissions. And these are absolutely deadly. These two are the death knell for most people. And then on top of it, this is assuming even if you have your game kind of in order, you have your psychological components, your own fallacies and personal screw ups on the psychological level that will compound this stuff. And you're done. You're absolutely done. Smaller time frames equal more difficulty. If you're new to trading, Don't start out on a 1 minute chart or even a 5 minute chart. Move up to at least an hour. Preferably start with daily bars. If you can't build a system on a daily bar um, and have it work, you have no hope, I think, on smaller time frames. Also, number three is one system is all I need. This is a fallacy that you see come up again and again. People have this idea that all I need is one system and then the riches will just flow in. So let's take this classic example. If you had a 401k, for example, some type of retirement account, you're familiar with this type of pie chart where you'll divide up all the different assets throughout your 401k. You might put some in the pension, you might have some in a pension, you might put some in stocks, bonds, ETF, gold. Maybe you'll do some futures trading if you're really advanced. The point here is you're going to diversify across all these different asset classes. Now, for some reason, when people come to automated trading, they just have this idea, hey, I just need one system, and that's going to make me $500 per day, and that's all I need, and I'll be able to quit my job and be happy. Well, that's not how it works. In the reality, what you have to do is also build up a portfolio of trading systems. So you're going to have a rotational system, trend following system, mean reversion, maybe a day trade, and a swing trade. These are just made up numbers. Of course, this is just an example. But is this making sense that you would have to build a portfolio? And this portfolio is going to be different trading styles, like I have here, but it's also going to be across different markets and perhaps different time frames. So the point will be not to trade one system. The point will be to build up a portfolio of systems. That's going to be your ultimate goal here. Okay, number four, unrealistic returns. Now, what people do is they say things like this to me. I want to create a system that people can trade themselves with an annual rate of 20 to 55% per year. Now, this is somebody contacted me who wanted to build a system so he could sell it with these amazing returns, but of course, he's never built a system before. So, well, let's take a look at reality. U.S. stock market, we have about 80 years of history, or what I've looked at was about 80 years of history, and that average is about 9%. How about you start there? Can you beat 9%? If you can't, you have no hope to get any better to reach that 20 to 55%. Well, let's look at managed futures, the Barclay CTA index. Now, these are some very talented people and talented institutions with money, again, and intellectual property backing it up. 11%. If you can do 11% per year annually over a long period of time, that's excellent. So maybe that's what you aim for after you accomplish about 9%. And then there's the best hedge fund managers in the world. They're going to average maybe 13 to 20% per year. So these are much more realistic values. And these best hedge fund managers in the world, again, these are in the top. These are your best performers. So to come out of the gate hoping to make 13 to 20% per year, well, that's not realistic at all. All right. So here's a good estimate of returns. Is this all making sense? Go ahead and feel free to ask questions throughout this presentation at any time. Looks like we have a quiet group here. So let's estimate returns for a well-polished trader. So in general, return is going to equal 2 times your drawdown. So if you have a trading method, that has a 15% drawdown, well, 2 times 15, that's going to give you a 30% return. So this is a well-polished trader, and this is something that perhaps you can aim for. But keeping this expectation in check is so vital. All right, let's move on to another really important topic, and you're probably aware of this topic. But risk and money management is like walking out on that ice on the lake, and you have no clue of how deep it is, how thick the ice is, any type of safety precaution. You are really treading in dangerous areas. So, number one, this is a concept that I don't think people really fully understand, that you can lose with a winning system. Let's say I give you a system that's guaranteed to win 60% of the time, and it's going to win $500 each time. Next, I'm going to say it's going to lose, obviously, then 40% of the time, and it's also going to produce a loss of $500. So you can see that this, over the long haul, this is just going to be a winning system. It's going to win $100, roughly. Well, which I shouldn't say that. Well, I'm just looking here at the comments. Yeah, there's no comments here. Okay, got distracted. So I give you a winning system, 60% of the time 500, 40% of the time it's going to lose with 500. And the question becomes, sure, this is a money ATM. It's guaranteed to make money in the long term. But what starting capital do you need, right? And this is something that most people do not take into account when they start trading the system. They put their $5,000 in, their $10,000, their $3,000, whatever it is, and they just start trading, not knowing how to figure this out. So I want you to think about this. If I gave you that type of system where it wins 500 and then loses 500, but it wins 60% of the time, what starting capital do you need to start trading this? Go ahead and enter that into the comments or send that to me. I'd like to see what numbers you come up with. And we're going to come back to that in a few minutes. So go ahead and think about that and type that in. Now, the other thing is people just don't understand risk. They go into the forest not understanding the risks involved. So you've all seen this, okay? Let's say you have a trading account. And what we want to do is determine what your stop loss is. And this is what I mean by risk. So let's say this $100 bill represents your stop loss for a given trading system that you want to trade on the Forex market. And let's say it's $100. That amount is your stop loss amount, and that's your risk per trade, okay? And then often what you see is people will say, don't risk more than 2% per trade. And that's what they mean. Your stop loss value relative to your trading account size. So if this is a $10,000 trading account and you can't risk more than 2%, because that's generally a good recommendation, well, that means you can only risk $200 per trade. In other words, that's what your stop loss is going to be. So does that make sense? That's completely realistic, I think, and something that a lot of people, they know, they've read about it, but they don't implement it with discipline. So, of course, how I got that was 10,000 times 0.02, 2% to get the $200. Always keep in mind your biggest loss is coming in the future. When you look at your history, the biggest loss is always in the future. So now that you know, kind of like, okay, for a $10,000 account to only risk 2%, I need a $200 stop. We can take this a step further, and that is determining your risk to ruin. So after you understand the concept one there, people don't compute their risk to ruin. Now, when trading a system, how likely is it that you're going to lose so much money that you must stop trading? This is a question you need to ask yourself. So again, you come up with your Forex system, you put your $10,000 in, stop trading. Is this a loss of 50% of your capital? Is this a loss of 75% of your initial capital? Or is it when you lose everything? This is important to understand that you define this at the beginning, because what you want to do is use a risk to ruin calculator, which is actually done through a Monte Carlo type simulation. And I'm going to provide one for you. Indirectly, that is. I'm going to actually provide links to ones online. So that will be in the resource section at the conclusion of this presentation. But here is what a risk to ruin table will look like. So at the top here in the blue on the different columns, we're looking at starting equity. So from left to right, it's $20,000, $25,000, all the way up to $40,000. And then what we want to look at is this column highlighted in red, or I should see this row highlighted in red, and that's going to show your risk to ruin. So in this case, I don't remember exactly, but I think I probably put risk to ruin was 50% loss. So if we started out with $20,000 and the risk to ruin was going all the way down to 10,000, this said I have a 2% chance of this happening. But if you increase your trading account to 25,000, the next column over, you can see it says 1%. And then $30,000, it goes to zero. So that's the power of a risk to ruin analysis. And you know what? It's pretty simple to do. It's got fancy names and it sounds impressive, but it's pretty simple to do and it's a valuable tool. It gives you a ballpark estimate on how big your account should be. So in this case, it's somewhere between 25 and 30,000. So if you're super cautious, which you should be probably at around $30,000 to trade this particular system. And again, I don't remember really what this system was. This is just an example. Is this making sense to everybody? Why you would want to know this before you start, and how important this is? I guarantee you the professionals are doing this. And if you're not doing it, you're an amateur playing in the professional arena, and you're going to get crushed. Too small account. This goes hand in hand with what we just computed. People will ignore this and just trade far too small of an account. So your trading system determines your account size, not you. You have a system that's excellent, you want to trade it, and it says you need $30,000, but you want to do it with 10, suicidal and very stupid. Your trading system determines your account size, not you. If you don't have the proper capital to start trading, find another system or start saving your money. Start stashing more of your money away, cut back on expenses, do whatever it takes to do that. But don't trade too small of an account. That's probably the number one killer. So let's go back to how to determine your account size. This is going to swing back to our example in regards to that fictional system that was an ATM machine. So how big of an account do you need? Well, the risk to ruin is one way to do it. Okay. The other way to do it is through this calculation if you know your stop size and your risk per trade, which you should. So account size is going to equal your stop loss divided by your risk per trade. Let's say we have a $250 stop loss for this particular system, and we want to risk only 2% of our equity per trade. Well, that means we're going to need an account size of $12,500. Now, what I would do is that's a great starting point for this particular system. I would then go through the Monte Carlo simulation, and it might be a little bit higher, or it might be right in line with this, and then take the more difficult, challenging, larger account size as the starting point. So this is a quick way to do it, and the Monte Carlo takes a little more effort, but it's still pretty easy, and that's probably the better way to go. So we can use this in conjunction with the risk to ruin to determine a reasonable starting point. The whole point here, finding something reasonable. And this is the foundation before you could even start trading. And this is a great foundation to start from. If you don't implement this, if you're not doing this, look into that Monte Carlo simulator that I'm going to show you in the resource section. Go to it, learn to use it, and start using it. So here we go. Remember this? Okay, this is our winning system. 60% of the time it's going to win 500, and 40% of the time it's going to lose 500. So what starting capital do you need? We have all the information. So let's take a look. Well, account size, that's what we want to figure out. It's our stop loss divided by our risk per trade. Well, we know our stop loss is $500. The most this will lose per trade is $500, and we only want to risk 2%, 0.02. So we just simply do that division, and we come out with $25,000. Did you come close to that? You could trade this with less, and you might be okay, but that's not really a winning strategy. So most of the time, people are far below this. Based on this one, $25,000. The point here is that you could have a winning system and still lose money. And that's what happens to a lot of people. And it's for myriad of reasons, but this is one of the reasons. Other reason, of course, is people just can't handle drawdown. And so they have a winning system that goes into drawdown, they panic and they exit, and they never write it back up. So risk to ruin, Lose half of your starting the trading account. Oh, yeah, I forgot about this slide. I took this example and I did run it through on Monte Carlo. So I said, okay, let's say half of our starting capital is lost. That's going to define what we call our total ruin, where we would stop trading. Okay, for a $25,000 trading account, after I ran it through my Monte Carlo simulation, there was exactly a 0 chance of a risk to ruin. So that worked out pretty well. If we went down to 15,000, the Monte Carlo said, hey, you know what? You're still okay. 10,000, okay. Then it went to 2% chance. And if you went down to 5,000, you had a 13% chance of losing half your starting capital. And if you only did $2,000, wow, it really jumps to 44% of the time. You have a 44% chance of losing half your starting account. So let's move on to another topic. I hope you're enjoying this stuff. This is really important. I know this isn't flashy indicators and sexy trading systems, but this is something you really need to look into and really master. Uncertainty. The trading world exists in a cloud of uncertainty. And what do I mean by that? Well, let's take a closer look here by using a little story. Let's ask the question, who's likely to be a better trader? So we have a computer programmer here who's never traded before, and he wants to become a system trader like us and become successful at it. Then we have a retired doctor who wants to trade his retirement account and become a successful trader. Also, we have a retired baseball player who's done pretty well and he wants to become a trader. Who's more likely to become a better trader? Any idea? Any idea who would be better? Where would you put your money? All right, we're all in the betting, right here. I would put my bet on the baseball player. And does that surprise you? And why would I pick that? Well, the other professions, the doctor and the computer programmer, they're paid to be right, right? You are paid to make correct diagnosis as a doctor and do those procedures correctly. And you have to do them correctly. You can't be right 60% of the time. And likewise, as a computer programmer, if you're building programs, code for companies, you have to write code that works 100% of the time. Only makes sense that you're paid to be right. The people that can write clean and efficient code, the doctors that do excellent procedures that are perfect, that don't screw up, are 100% or darn near 100% right. People are paid to be right. But in the trading world, it's completely different. You're not paid to be right. And a lot of times you have to let this sink in. You don't get paid to be right. That doesn't make sense in this world. And why is that? You're paid to trade well. And this may take some time to wrap your head around. It did for me before the light bulb moment was like, oh yeah. And the reason is, what do I mean? You must accept being wrong, perhaps most of the time. They're called losing trades, and it's called drawdown. You have to accept being wrong, often a good percentage of the time. And it's painful, but it often means you're still doing okay. Now, why is a baseball player more apt to be acclimated to this type of environment? Well, let's give an example of an excellent baseball player, and his batting average might be .336. What does that mean? Well, that means he has a 33.6% chance of coming up to base, hitting that ball, and reaching first base. The absolute minimum requirement to actually score a run is you got to reach first base. But he's going to do that only 33% of the time. What does that mean? Most of the time, he's going up to swing at that ball, and he's going to fail. Now, this batting average is of Ty Cobb. He played in 1938. He did 24 consecutive seasons with a batting average of 33.6. He is a world record holder. He is held up on a high standard. He is one of the best in the business. but yet he's only winning 33% of the time. This is what I mean is you're not paid to be right. You're paid to trade well and follow a certain set of rules over and over again and see a loss, stick with it, stick through it because you are properly capitalized like we just did. You have diversification across multiple systems and multiple indicators. In the long haul, you're going to do okay. So you have to adapt this new mindset. The missing piece in your head why you're probably not making money is this mindset. Hear me out on this. Your mindset of all this stuff that I've been talking about is probably what's holding you back. You must accept uncertainty. When you put on a trade, you don't know. You never know it's going to work. When you bring a trading system to the live market, you have no idea if it's going to crash and burn, but you must accept it, move ahead. Of course, you're going to take all the precautions, like we just talked about, proper account size and everything, but you must accept uncertainty, and you must understand the probabilities of what's happening. So, number 2, understanding simple statistics and confidence intervals. This can go a long way with helping build your confidence. So, of course, you're going to have to spend some time doing statistics. I'm not going to go over that now. But what I do want to hit is, after we've talked about all this stuff, is really, well, how do you go about winning at this? This is where I'm going to provide some resources, some excellent resources, in fact, that will help jumpstart you having the right mindset and framework to become a successful trader. So let's jump in. First, be a realist. Be skeptical of what you see. I want you to develop a mindset that most of what you see is suspicious. And what's great about systematic trading is once you become a successful programmer, you can go out and create experiments and see what really works and what doesn't work. So be a realist. If it sounds too good to be true, then it probably is. You see an equity curve like this being advertised? What do you think? Does this look realistic? Does it look too good to be true? I don't see any drawdown. I don't see, what a smooth ride. Does this really exist in the real world? No. Be skeptical. Does anyone know what this is? This was an actual fund out there. This was the Bernie Madoff fund. So, treat everything as an experiment which needs to be supported with evidence. Think like a scientist, right? Be skeptical. Treat everything as an experiment which needs to be supported with evidence. So to take action in this is a series of, this is kind of funny. This occurred just about a year ago, a series of lectures. And it's an honest to God class called Calling Bullshit. And it's all about BS and how to help detect it when you're reading material online. I'm going to I'll have that in the resource section, but these videos you may find interesting and helpful. Also, pick up the book Evidence-Based Technical Analysis. This is applying the scientific method and statistical inference to trading signals. A little on the technical side, but it's something you really should be familiar with. Great book for starting out and helping you get this mindset. So, in the realm that it's not easy, obviously, we talked about this. You just can't read a few books and watch YouTube videos. You can't just wing it. It requires a lot of hard work, okay? And it's going to require years of practice. You got to get this in your head. It requires you to become a new person, right? The whole mindset of accepting uncertainty, understanding statistics, and ultimately becoming a computer programmer. You're going to be a new person when you start pushing through this journey. So the point is, this is a skill. Like any great skills, it requires dedication and a lot of hard work. Really, you know what? Anything in life that's worth pursuing, it takes a lot of effort, whether that's a marriage or becoming a doctor or becoming whatever it is. It's a skill that requires a lot of dedication. So to take action in this area, personal productivity, you're going to have to learn to get more done with the days that you're given. And I think this is a book that I reread occasionally, that changed my life on how I organize my life. It's Getting Things Done, The Art of Stress-Free Productivity by David Allen. This came out 10, 12 years ago. It was really popular. You see it all over. I still think it's an excellent book. And I highly recommend this if you really want to get a hold of your life and become more productive. And why would you want to be more productive? Well, there's a lot going on in your life. And if you want to be a successful trader, it's about optimizing your time so you can get more done, so you can dedicate time to trading and learning the skills, but yet also having the free time to enjoy life. Highly recommended. So to become a productivity ninja, you have to study productivity and you have to adapt new habits each month. Try to take on a new productivity habit each month. And by the end of the year, you'll see a huge increase in your productivity as you're slowly changing yourself into a productive person. Most people waste a ton of time, a ton. I do too, of course. I try to minimize it and I think I do a pretty good job, but they waste time on Facebook, reading the news, watching TV. Of course, you don't want to just eliminate all of it, but you have to be mindful of what you're doing and what time, how much time. Most people have no idea what they waste on email, social media, and TV. You want to do a scary test? Throughout the day, carry some type of notepad, and every hour, write down what you were doing. Were you watching TV? Were you reading a book? Were you on Facebook? Were you mulling around the yard? What were you doing? Record this. Do this for several days. Do it for a week if you can, and then look back. I call this like a time audit. And see where you waste your time on TV, social media, doing meaningless things. I think you'd be rather shocked. I like to do that time audit every once in a while, maybe once or twice a year, just kind of as a little reminder. So start unplugging and doing the work that really needs to be done. This is all what needs to be done if you want to become a productivity ninja and really help you become a successful trader. So take action in this area. Fantastic book called Deep Work. It's rules for focused success in a distracted world. In a world of email, Twitter, Facebook, having your phone on all the time, you should get this book. It's going to open your eyes and provide some exercises to help you get the deep work, which is meaningful work, like learning system trading. Don't you want to become a successful trader to help attain the freedom and financial success you want? That's deep work. And it's going to require dedication and skill and how to cut through the issues that block us. And a lot of this is social type media, again, in a world that's distracted. And this is also, again, in the resource section. Know your numbers, right? You have to know your numbers if you're going to be a successful trader. Be properly capitalized. Control your risk. Know your risk to ruin. Best people in the world have a 30% annual return. Don't expect 50% annual return, particularly out of the gate. Don't even expect 30 out of the gate. Try for 9 or 12. So know these numbers. Again, return is going to equal roughly 2 times your drawdown if you really know what you're doing. A more realistic one, maybe for starting out, is your return is going to be 1 times your drawdown. So you want that 30% return, you're going to have to expect a 30% drawdown. Hey, if you want to know your numbers, can you handle a 30% drawdown? Right? Does that make sense? A 30% drawdown for you. So can you handle it? Know your numbers. And then ask yourself, can you handle it? Is my account size correct? Can I handle the drawdown? So to take action in this area, another fantastic book, Trade Your Way to Financial Freedom by Van Tharp. Great resource. It covers a lot of the numbers aspects of building a successful trading system, deals a lot with risk. So take a look at that one. Know your game. You got to know what game you're in. Scalping is not easy, right? Because you're competing against high frequency traders. Stick with higher time frames. Fewer trades, longer holding periods. This is where you're going to make money, particularly starting out. Work with your higher time frames and then drill down to intraday. People do it backwards and they bang their head against the wall. Know your game. Understand your platform and how it works. Know how to get in and out of trades. Know what type of slippage and commissions. Know your broker number if your internet connection goes down. Really plan and understand your platform and how it works. In other words, know your game. Know your equipment. Hey, if you're going to be doing open heart surgery, you know how everything works. You know how the clean environment works. You know the people around you, the equipment you need. Likewise, to have that in your corner as well. Managing your psychological issues. Remember, this is a business, not a hobby. If you want to do this as a hobby, it's probably not worth doing because you're just going to lose money and it's probably not going to be fun. The idea is to actually spend money on hobbies that you like to do, but losing money in the market as a hobby doesn't seem very helpful. You don't get paid for working hard. You get paid for being right. Okay, this is so critical to get, that you don't get paid for working hard. You can work 60 hours a week in your trading, but if you're just chasing indicators and you have too small of a count, what's the point? 60 hours and you're dooming yourself to failure, and people will do this. This is them creating a prison. They live in a prison of their own fashioning where they don't follow the basic rules that I'm explaining here. And so what do they keep doing? Losing and losing and losing, putting in hours and hours and hours, and sacrificing their personal life and often their family life. You're paid to trade well. The ultimate idea is to actually trade so well that you reach a point where you start trading less and you start making more money, right? Ultimately, you want to work fewer hours and make more money, and that's by trading well and doing the right things. And what are those right things? Well, there's the whole slew of them that I went over tonight. Fear and greed distorts your reality, right? Fear and greed. You must make decisions with imperfect information. So these go hand in hand, and these are psychological issues that I can't get into detail, but I have a resource for you that will help immensely in this area. But it's so important to understand that decisions must be made in this world with imperfect information. You don't know if a trade's going to work. You don't know if the market's just going to tank tomorrow. So you have to have your stop in. You have to place the trade even though it feels uncomfortable. Trading is a profession where if you feel uncomfortable, you're probably doing something right. And it's just a natural part of this business. Is this making sense to people? The whole psychological component. You must also learn to love to build systems. Why? Well, because most of your ideas in this business they're just not going to work. You're going to build the system and it's not going to work, and then you have to move on to another idea. There's a lot going on. You're constantly having to build and test. So if you don't like building and testing systems, you're probably not going to be good at systematic trading. It's just something you have to really enjoy. And to take action in the psychological realm, Trading in the Zone by Mark Douglas. This is mastering the market with confidence, discipline, and a winning attitude. This was a great help for me when I was first starting out trading and getting some of the mindset down. So very important. So, conclusions. I hope this is making sense. I hope this is having some light bulb moments for people. I want you to notice, I did not talk about strategies, setups, market studies, or the next killer indicator. Trading is much more than that. I can give you a strategy. Setups are all over the place. Market studies and the next indicator, all this stuff is just out there free for the taking. And like I said, I can give someone a trading system, and I have done this. I know people that have systems, some that I gave to them, and I ask them 12 months later, oh, are you trading that? How are you doing? I noticed it's up, X dollars this year. Oh, I'm not trading it. And they'll give all kinds of reasons. So it's not about the strategy. It's not about the setup. It's much more than that, okay? Too many people focus on the wrong areas, and I hope you're seeing that now, that strategies, setups, market studies, the killer indicators, the flashy stuff that you see out there all over is not going to make it for you. Too many people focus on the wrong areas. I know customers who still lose money when they buy a trading system that works, like I just went over. Ultimately, as we're winding down here, the 6 pillars of trade success means you're going to have the trader's mindset, working with uncertainty, and knowing that being successful means being wrong most of the time. Proper capitalization, we hit that hard. Monte Carlo simulation, risk to ruin. Also, system development skills. This is a whole other arena. How to build systems that actually work. Trader psychology. Hey, that psychological component that gets in the way, all fighting those demons. Technical know-how. How do you work this darn trading platform? How do you program and code? A whole other realm. And then, of course, personal productivity, which kind of wraps all this up together and also gives you freedom in your personal life if you can get more done in less time. So I consider these the 6 pillars of successful trading, and you should be firing on most of these. The more you do, the easier your life will become. So keep these in mind that you have to be hitting all of these different pillars. So, conclusions: focus on being a realist, know your numbers, impose self discipline, learn programming and statistics, become effective with your time management, trade live as soon as possible to build your immunity to psychological issues. That's really the only way to do it, is to actually, you're going to have to commit to losing money and being okay with that as you're training to become successful. It's the only way to really inoculate yourself from the psychological issues. So, listen, if you're still watching this and you're not making money, don't focus on hot indicators, the perfect strategy, or the next setup. Step one: if you want to be a system trader, find a simple system that works. All right, this is your crash course advice. Find a simple system. There's a bunch of them out there. If you're not sure, email me. I'll tell you a simple strategy. Trade it for 6 to 12 months. Find a simple system, trade it for 6 to 12 months. Learn to master your emotions when trading live with real money. Now, the point here isn't that you're going to make a lot of money. You may even lose money. But the point is to master your emotions when you have money on the line. Learn to master your trading platform when trading live. If you can't trade one system for 6 months successfully, you'll never become successful. So take that one simple step of finding one system and trade it as a test for 6 to 12 months without screwing it up, without intervening, right? Trading it with a proper capitalization and letting the automated system do what it's supposed to do. All right, I'm going to take a quick swig of water here. Bear with me. Okay, hope this is making some sense, but I highly advise this little experiment. I think it'd go a long way. The winner. All right, we're closing down here, and I have a couple more final ideas. The winner is the one who makes the least mistakes. And this came from when I was watching a poker game on TV, and they had these 5 or 6 experts all competing against each other. And someone made the comment, geez, at this level, who's going to be the winner? And someone made the brilliant comment that the winner is the one who's going to make the least amount of mistakes. So every day you trade the markets, it's a psychological test of your discipline. Are you going to screw up? That's what the markets really are testing you every day. And it's going to punish those who make mistakes. Every day you trade, the markets are a psychological test of your discipline. Only through discipline can you win. So you need the system development process. If you want to be a successful system trader, outside of all that realm that we talked about, of being properly capitalized, the psychological components, and everything else, if you want to build profitable systems, which I'm sure you do, you need a process. Building trading systems that work. Let's quickly talk about this as the last part of the presentation. You simply just can't wing it if you want to build a trading system. You can't cobble together a few indicators. You need a process. And over the years, this is what I came up with. These are 12 steps that I personally follow to build profitable trading systems. I got this down to a science. These are the 12 steps that I systematically follow every single time. So this comes now to the portion of the webinar here where I'm going to promote something that it's an ebook that I created, and it's actually more than an ebook. It's a crash course. But if you don't like sales pitches, feel free to go. I hope this was helpful. I hope you got something out of it. Again, I'm going to send out a resource link to you, and I hope you take advantage of that, because what I covered today really was very important. It's not very sexy, but it's so highly important. For those of you who want to continue with me on this, what I have here is a crash course, my system development process. It's a ebook, but much more than that. And it's all about building profitable systems. I actually walk you through the 12 steps that I just showed you on that infographic. These are the 12 steps that I follow to build profitable systems. But like I said, it's more than just an ebook. You're going to get a 12-step infographic, simple code in easy language. You're going to get an exit methods mind map, and you get a process, the entire process as a mind map. You also get my system development notes, which is a template, a workbook template that walks you through fill in the blank type template on how to build systems. You get TradeStation reports, and also you get access to System Trader Success Insider. Now, this is a private website with exclusive content to help you become successful. It's kind of a companion to the ebook. It's an enhancement to help you become a successful trader. Well, what does this entail? Well, the biggest portion, of course, is I actually come on there once a month to answer calls. So it's a live Q&A with me. It's a group call, but you can ask questions about the ebook or your system development questions. And we do that once per month. There's also, of course, additional video training in there on how to get set up, some tips and techniques that I like to use, highlight some of the features of the ebook, help make sure that you get the most out of the ebook. So again, the ebook and the private website, System Trader Success Insider, this really is a system development starter kit. So if you're interested in building trading systems, maybe you're not very good at it, maybe you've never taken a system to the live market, maybe you'd like to really learn this a bit more, you take it a little more seriously, I highly recommend this, the System Development Starter Kit here, which I'm offering. And you know what? You can get all of this, the ebook, which is 100 plus pages, the 12-step infographic, the example code in easy language. Again, this doesn't have to be, you don't have to be an easy language user. I use easy language in TradeStation, but this is a framework that can be applied to any platform for any system, for any market for that matter. But this also includes an exit method mind map, a process mind map, system development notes, TradeStation reports, live group calls, and of course, additional video training. And all of this is only available for $49. I think it's a fantastic price for all this value. So if you're at all thinking about becoming a successful system trader and want to become good at building systems, remember those pillars I showed you? This ebook covers the one pillar called system development process. Having the right steps in place in order to take an idea that you have for a trading system and bringing it to the live market. So this is a fantastic ebook and course for that. So of course it comes with a 30-day money-back guarantee. If you get the ebook, hey, you don't like it, simply email me, not a problem. So how to get this? Okay, what I'm going to do is see if I can actually send up the link here. Let me go to my platform and see if I can put this special offer up. All right, I think I did that correctly. Let's see if that actually comes through. So again, if you have any questions, feel free to ask them. We're about at the Q&A session here. I'm also going to put up, how to download the resources. I'm also going to send that out as an email. But you should, off to the right-hand side, have a blue button there that says get access now and how to get that ebook. That's just going to take you to a simple page that will actually, what should I say, take you to a sales page where you can download that. I'm just also being distracted here looking, no comments or very few comments. Yeah, again, somebody's asking, is this for TradeStation only? And it's not for TradeStation only. Again, it's a framework that you can use for any market on any platform. So it's really kind of generic. Yeah, it's 100 pages. Excuse me, just took a drink of water. Well, yeah, really not much. We got a quiet group here. Well, let's march on here. So this is the Q&A portion. And I suppose I should put that button back up just in case, but I think what I'll do is send a link out. I don't have any questions. We got a smaller group today. This is the first time we're doing it on a Saturday morning here in central United States. So I was wondering how this would kind of work out. I think we have kind of a quiet group, but feel free to ask me questions at any time. You can always email me at jeffswanson@systemtradersuccess.com. Well, I guess that's it. I hope you enjoyed this presentation. This was a lot of great material. Again, at the conclusion, I'm going to send you the resources. So take those seriously and look those over. And I really hope you join me for the ebook and System Trader Success Insider, because I think it's a great way to really jumpstart your system development. And the live Q&As, you get to ask me whatever type of questions, and you get this fantastic ebook that explains the 12 steps that I follow to build profitable trading systems. Fantastic resource. So with that, thanks again for joining me. I really appreciate taking this time out of your Saturday morning to join me for this. I really, really appreciate it. I know we all have busy lives. Hey, and thanks for, I hope you're enjoying System Trader Success. We got a lot more great material coming out in 2018. So, go enjoy your weekend. Keep an eye out in your email. I'll be sending something out real soon. So I guess that's it. Everyone, take care.